The Hedgeless Horseman here. It's December 14th, 2023, almost 2024. First of all, thanks to the sponsors. And last video was a big old rant. I'll be a bit, well, I say that every time, but I'll try to be a bit more short and concise. But there's a lot of stuff going on. I mean, it's a smorgasbord when it comes to these. The junior sector, basically, I would say most metals actually. So I mean, there's a few things that's always good to keep in mind, unless you're gonna go absolutely mental. I mean, well, I should actually start off with this. It's like I saw in the Magna channel, Paul wrote, this market is awful, and he's a capital markets expert, and I at least think he has, I think he has at least like 20 years experience. This market is awful, absolutely brutal, by far the most apathetic, dysfunctional pig of an equity market for mining stocks I've seen in over 20 years. No mining stock, let alone any junior, is truly exempt. We're all being taken out to the woodshed, and often there is no explanation for stock prices falling or failing to rise other than terrible sentiment. If you want evidence of that, we've been announcing 4 to 6% wide nickel intersections this year. Nobody cares. If pure investing in juniors, the main question to ask yourself is which ones give you the longest fuse where they don't need to raise money while we all wait for this sentiment to shift. Because shift it must, unless everyone is going to stop consuming metal forever. I mean, that's a, first of all, very important thing. It's like today, or last 2 days, I guess, commodities are booming, stock market has, I think it's done well. And of course, the funny part is about all of this, like, commodities have sucked, or I should say mining companies have really sucked. It's like, but they're still the basis for all the companies making up the big indices. You couldn't have this without these. I mean, that's something we should not forget. And also, which people tend to forget. It's very, I guess it's very human. If something goes on long enough, people think that's how it's forever gonna be. I mean, these are some truths. A bull follows a bear 100% of the time, and a bear follows a bull 100% of the time, by definition. So we know this bear is going to die, and the funny part is that the longer and more brutal a bear is, the older it gets. People think, it feels like it means it's going to go on forever. There's no end in sight. I mean, that's the definition of a bear market depression. When is it the bleakest, or I should say the darkest? When nobody can see a single ray of light. Everything is supposed to look completely dark. Nobody sees anything that leads them to believe that prices will go up on these stocks. And that's, when it comes down to it, that's how people invest. People invest in stuff they think will go higher in price soon. What people fear the most, especially if they already have paper losses, is bigger paper losses. Forget about price to value investing being a contrarian. At the end of the day, what drives people in any given moment is their hunch about where a stock, if a stock is going to go up or down. People will gladly, I shouldn't say gladly, vast majority of people will sell a stock they think is extremely cheap if they think it's going to go down in the short term. Everybody's trying to be, well, most people, 95% plus, tries to be a perfectionist. That's just how it is. You know that, I know that, I get that feeling as well. The more active I am, I would say it like this, that there's a high chance the more activity you do, the more mistakes you do. I haven't made money because I time anything perfectly. Really. It's the holding, buying cheap and holding, that's where I made money from. And of course, it's like you can buy something that's gonna become a 100-bagger one day. Let's say you buy it at the absolute low, and I think I showed this in the other video. If you buy it at 100, the peak low, I don't know, you probably don't say it like that, but you know what I mean, the absolute bottom. There's still no guarantee you'll make much money. I mean, you can sell it the next day because you think it's going to go down. It's the person who holds it for maybe 3 years. He makes a lot of money. Buying cheap is still not enough. You have to have staying power, and typically, as anything with growth, the longer you hold it, the more it will grow. And the higher the value will be, or the gap between the price you paid way back when to the current value and probably price. And I'm not in this sector, especially right now, for the next 10%, the next 20%, not even the next 50%. It could go either way. I have no idea. But we do know a few things. I mean, if you buy high, the worst that can happen, assuming you don't have leverage, is minus 100%. Stock goes bankrupt or dilutes 99%. We also know a full bull leg from the bear market depths in the junior sector produces anywhere from 300% to 2,000% from those price levels, typically. That's why I'm here. I mean, a day like this, metals are rocking, some juniors are up. I mean, yesterday I saw some juniors up, over 20%. People cheer, etc. It's like, why do we cheer? Did we win? No, we didn't win. 20% is nothing, when this bull gets really going. And as always, and I went over that in the last video, it's like, the only time we know, kind of know that we're going to be able to capture the brunt of the next bull is if we invest when everybody for sure knows it's a bear market. But most people work the opposite way, obviously. They think the correct way is to be in a market that everybody knows is in a bull market. Everybody can see it's in a bull market, meaning the past performance has been very good for, I don't know, months or years or whatever, and the stocks are up a lot. Anybody can see there has been a bull market, and that's when people think they should invest. And if it's a bear market, they should be out of it. Problem with that is obviously that when those things are obvious, is the time to do the opposite. And if we go back to this comment here, it's like, the worst equity market for mining stocks in over 20 years. Okay, what produces the biggest bulls? The biggest bulls is just the delta from where traded one at point X or time Y, and then, some time in the future. You can have stuff that, okay, it's trading at $1 billion, it goes up to 10 billion. That's like, 10x. You have something at 10x, it's going to be hard to get that to 100 billion, etc. But when the easiest things, or the easiest way to get huge moves is to simply slam stuff down where it's trading for absolutely peanuts. A 1 million market cap company, if it becomes 100-bagger, that's 100 million. That's not unheard of in this sector, especially during a bull market. But if it starts at 90 million, let's say, in a hot market, obviously, to 100x that's not typically going to happen unless they find the best deposit in the world. So it's like, hate it or love it, that's how markets work. For the biggest for the biggest rallies, we need the absolute worst possible sentiment. If this didn't stop here and became even worse in the 2008-9 financial crisis, the leg up afterwards wouldn't have been 1,000, 2,000% basically. It might have been 2,200%. And again, the market averages, broader market averages 8 to 9% per year over the long term. So just a small shift. Yes, I know, in the grand scheme of things, it doesn't look like a lot. But it's like, it goes from 55 cents to 50 cents, whatever. But that's, in this case, that would have been 300 additional percent bottom to peak. That's like, I don't know, 2 decades worth of average stock market returns. It's absolutely incredible. And the point is obviously that if we want moves like this, the easiest way is for it to crash super low before. Because, let's say it stopped here. In order to get a 2,000% rally, I don't know how high Bear Creek would need to go. Unfathomable heights. Like worth billions of dollars, I assume. That's very, very hard to do. But if you get something cheap enough, 10 bagger might not be a problem at all, really. 20 baggers realistic if they make a real discovery. And if you buy something that ends up making a real discovery, and you buy it at the worst possible sentiment environment, that's where you can theoretically get your 100 baggers. And obviously that would pay for, if you had 1% in that of your portfolio, if every you have 99 more stocks, 1% each. If 99 out of 100 went to zero, that would have paid for all the other ones. That's how asymmetrical the risk reward becomes at depression lows. If you fully invested here, you had to be an incredible stock picker to make money over the last 3 years, or the next 3 years, I should say. Because valuations were high. If you were paid for something, it would need to become extremely valuable in order for it to be able to buck the sentiment trend here. That's not unlikely. Down here, and you would, need to be right by a lot, or on a large amount, because let's say 90% of the stocks from here to here in the junior space are down 70-80%. It's hard to find something that would like 40 bag at when the market was this hot. Down here, if you bought 100 different juniors, I think a few that would survive are gonna end up becoming like 40 baggers. You get 100 shots at it. I don't think that's unrealistic at all. It might take 2-3 years, but that goes with the territory. So that's the thing. It's like, yes, we can bitch and complain about this. And in this case, obviously, it's like, Paul is stating the facts, let's say. And of course it sucks. You have one of the better stories around, and still, at face value, this is what the market thinks has been happening to the value of the company, which is, doesn't track the news releases at all. It's just a trend. it fits perfectly. There's I don't have the chart up now, but you could draw a line basically. It's like a tradable channel. So obviously, fundamentals haven't gone like that, but that doesn't matter, because it's like, it's low liquidity, low volumes, and probably a bunch of traders and whatnot. So fundamentals doesn't matter at that point in time. There's not enough buying power. There's not enough money in this sector to keep it honest. And since many of the, if no new money entered the market, but nobody sold either, well, I shouldn't say that. If no money entered the sector, we know that junior miners or junior companies, they don't have any incomes and they have expenses. So that would be a net drain by definition on the entire sector, because they dilute and take in money. And if there's no money going in and nobody that's in the sector that actually wants to leave, if they're still tapped out, so it's like there's no more bears created, no more bulls, but this sector still needs to raise money, they spend money, they dilute. I mean, that's basically why, I mean, Bear Creek Mining, for example, I mean, it's a trading sardine, but it's with a downward slant, because it's like, you know, I'm pretty sure there's a lot more shares here than here, or here than here. I mean, I'm not 100% sure, I don't remember exactly, but I wouldn't be surprised if valuation now is kind of similar to what it was back here, but price is much lower because there's more shares out. That's just how it is. That's why I do not particularly like trading sardines, especially, I mean, I like them at extremes. Now, for example, I like beta, but I typically don't like pure beta too much. I want there to be value creation going on as well, preferably, or they must have simply a very low burn rate. I mean, in the case of Bear Creek, I think they have a money-losing mine going on. That's just not great, obviously. That's not staying power. But the point is, we can be down that we're not making any money really at face value. Paper losses might actually be increasing or been stagnant or whatever. I mean, there might be a few stocks that's done well. But still, it's like, that's what you need. There is no way on God's green earth you can have absolutely massive bull runs without crashes first. The lower this goes, the bigger the bull is going to be. If the bull peak, next bull peak would be up here. If this would have been the bottom, it's like 800%. This is obviously a theoretical example. When it went down here, 2,150%. So it's like, in order for, again, to have the best possibility of getting huge future returns, we need to sow in the worst possible market. I mean, it's like this. I mean, who made money up here? Anybody that bought for this, basically. Yeah, that's true. A lot of people got in here and made a bit of money before this happened. The ones who made a fortune were obviously the ones who bought down here and held it when it got up here. And obviously there's nobody on earth that would say this is a bull market you should be in at the time when the best buys happen. When the bull is beyond obvious, when the bear is beyond obvious, it's really time to buy. When the bull is beyond obvious, it's probably a high time to sell. This was one of the best quarterly rallies ever. Everybody expected it to keep on going, me included. We got a 2-year bear after that. Huge rally bear. And huge bear, again, there's 100% chance the mining sector is going to be in a bull market sometime in the future. 100% chance. 100% chance. It's no ifs or buts. There's 100% certainty that the junior sector is going to be in a bull market sometime in the future. And there's 100% certainty that at some point in time there will be a big bull behind us. That's just how it is. The sucky part is obviously the fact that we don't know when it's going to happen. It's like, I mean, 50% loss in the junior portfolio is nothing, basically. It's like I made a tweet about it. It's like minus 50% is not a problem, it just sucks. And of course, the funny thing is, like, I mean, there's people on Twitter that are talking about, now it's not the time to buy miners, now it's not the time to buy gold, whatever. It's like, and you ask them, it's like, okay, so what are your long-term returns? It's like, they're not really impressive, or I asked someone, and they weren't really impressive. And that's even if he's telling the truth. I mean, most of the time, obviously, if you ask some random guy who has a total opposite opinion of you, he's probably not gonna understate his returns, if you know what I mean. If anything, he's probably overstating them. But even if they were true, they were not even impressive at all, in my opinion. I mean, it's not what I'm going for. But those are the people that are all over Twitter, all over the forums, giving advice to everyone, commenting on, anyone really. It's like they're forcing their opinions upon people, and they're still not. I mean, they can't even prove to themselves that they really know what they're doing. But it's just funny that you see so much. And everybody has an opinion. Almost nobody actually has good long-term returns. That, again, does not stop people from commenting and saying stuff. I mean, people want other people to think like they do so they don't feel like they're missing out on something. I mean, people really get upset, typically, if you have a very different opinion than them. Because people are afraid that they are wrong. I mean, that's very human. But don't forget that. It's like 95% of tips or advice you get from people or opinion, it's not like necessarily they give you advice, but like 95% of comments about what they're doing or what you should be doing, whatever, that comes from people who do not beat an index. That is like almost everything you read is noise. And that was my goal from the start. It's like, I mean, when I started out, I think I started buying around, I don't know, here. And that's the thing, like, I thought that was low. Stocks I was looking at were down like 90%, something along those lines. That was low. In hindsight, that was very low. Especially if you take away the logarithm. Okay, now it's okay, that was actually worse. But this was low. This was cheap. My portfolio went down 54%. So that's just give you a sense how brutal this sector is. And if you can't stomach minus 50% paper losses, I have no idea how you could expect to make any money even long term in this sector. As at least as a value investor, like a as a trader, I guess you have stop losses. That's like, okay, you aim for, I don't know, 30% up, and then, if it goes down 20%, you cut your losses, something along those lines. But it's like, for a value investor or whatever, it's like, that is not a big thing. And I mean, I've seen stocks go up and down 20% in a week, in a day. That's like a huge bear market if that was the broader stock market. If Apple went down 20% in a day, I mean, that would be all over the news. In this sector right now, like $1,000 can take a stock up or down 20%. That's nothing. I mean, it literally is nothing. So if you can't stand paper losses, and I call them paper losses because even if you bought here and you were sitting down here, let's say you had a 85% paper loss if you only owned Bear Creek. Fast forward 2 years, you would actually be plus. Now the hard part is obviously we don't know what is necessarily a paper loss or what's going to be a permanent loss. I mean, that's why I keep saying it's like, I'm not afraid of paper losses. I'm afraid of overpaying for something that should go down and stay down. Even if I paid this price here, if the value is down here, that's not ideal, obviously. If value is up here, I bought here and it went down like that, that's a bigger opportunity. That's the thing. It's like, and I'm gonna go into that even more later. But just to show you a sense of like some of these sectors, I mean, every commodity sector, especially it's a cyclical sector. How dark do you think the uranium sector was down here? I think this is one of the larger uranium companies. Minus 94%. How dark do you think it was down there? I can't imagine how dark that was. It must have been like what the rest of the sector is right now. And at the same time, it's like, when was it a mistake to buy this? Even if you bought here, for a while there you were sitting at 86% paper losses. If you held it long enough, you would have a 77% gain, which is not actually bad. 2018, it's like 3 years, 77. I mean, that's beating the broader stock market by a good margin. And probably, I mean, you could go all the way back here, but imagine sitting through that. Imagine buying here, sitting through years of this, seeing your account down 86%, same stock. If you just held, you would be up 73%. There's no way that this person down here, if he held the stock and was alive, thought there's any way he'll get his money back. Paper losses are not permanent losses necessarily. It would be a big problem if this was fair value, or fair value would be even lower. So that's the uranium sector, from absolute pitch black. And of course, as always, the biggest rally is from pitch black to the next high, 1,200%. If he had 10,000 invested, went down 85%, so he has 1,500 left. He has $1,000. He would be up a lot actually in his portfolio, even though you can't imagine a much shittier way to go about it. That's the problem. But what everyone wants is to be along this and expect it to just go higher. Everybody wants to be investing in a bull market. That's what I'm saying. It's like nobody on God's green earth was expecting any positive outcome from this stock around here, because it was the negative emotion, the pain from the recent past was so huge, the trend was so obvious and so strong that obviously nobody thought it was a good idea to buy this. When nobody thinks it's a good idea to buy, when you see no rays of hope on the horizon, was the perfect, that's when you made your most money. And of course you can wait for, the whatever. It's like, oh, I think it's a bull market. Maybe that was here. It's like, yeah, okay, do that. It's like, yeah, you got 70%. The person who had no doubt he was buying in what appeared to be an endless bear market, he made out like a bandit. The point is, like last video, if you wait for the bull, you might catch a fraction of it. Because it's like, here, do you think everyone was convinced this was a bull market? That it would be 2/3 into a bull market, or only even like 3/4 in to a bull market, if we count this as the bull market? You see it not go past resistance, you see it key lower. Somebody could say probably that this might be a bear flag or whatever. No, there's no way. There's no way somebody is like, oh, I'm 100% sure this is a bull market here. And the funny thing, of course, in hindsight, it's like now, for example, we knew that, hey, this was a bull market. But at the time, even 3/4 into it, 3/4 into a 1,200% bull market run, I doubt the vast majority believe this was actually a bull at this point in time. Of course, here it feels much more like a bull, and that's why we tend to buy high. And here we start to doubt that is a bull already. Now up here people are convinced it broke through. It's absolutely a bull. Yeah, we're very close to the end of the bull. The bull is already old. I mean, you can look at whatever commodity, basically commodity complex. This is Pilbara lithium, which is obviously Pilbara minerals, but that's lithium. Find me a cyclical commodity sector where people have very bad experiences after buying multi-year lows and waiting, let's say 2 years. Sometimes more, obviously. But it's like anybody who bought in this area would be up. If you bought the top, that would the top of this box. That's 1,400%. In this scenario, this is 200%. So if you bought at any point in time during this entire period, by the time we hit 2016, every buy would minimum be up 200%, a tripling of your money. And obviously those numbers were quite different depending on how low you bought. This is 10,000%. That's 100 bagger. How many of those do you need? If you have 2 of those out of 100, you will do well. You will double your portfolio. And that's assuming the other 98 go to 0. What if only 30% go to 0? You get 100 bagger. And a bunch of, 5-10 baggers or whatever. But there's no way. It's like just looking at these stocks, like if you can't cope with minus 50%, look how quickly it's like this is the cutoff for minus 50%. And what do you do when you're down 50%? Should you sell simply because you're down 50%? How much sense does that make? Obviously, everybody's going to have the highest paper losses at the exact bottom, which we don't know when it is. So if you have like, now I'm down 70% or something like that now I should get out. It's just the bigger the paper losses, the closer we are to our bottom. Sector-wise, all else equal. That's just by definition. Here is when people were down the most on the most amount of stocks, obviously. The worse it got, the closer to the bottom it was. Okay, let's look at some news. Palladium prices surges 12% as UK sanctions target Russia metals. You can read the article yourselves. 12%, that's not a small bump. While the measures didn't target palladium supplies from Russia, which account for 4% on new mine supply, broader concerns about the disruptions were enough to propel the metal to the highest. This is the thing. It's like you see these metals out there being given away, even the strategic ones, where the governments and agencies and major miners are like investing in. It's like nickel, I think, is a perfect example. You see a bunch of governments listed as critical. It's on almost every list of with the highest threat to supply. You have, I think it's Pentagon or U.S. Army, something along those lines, gives out grants to some companies. You have Talon doing a deal with Tesla, This was a while back. I mean, and you see offtake agreements all over the place. I think Canada Nickel sold one to like Anglo American or something. I mean, you see these big players and you see stuff like this. And this was just a threat, apparently. It wasn't even... it seems that it actually didn't go through. But it's like, what is priced in the nickel sector? Do you think, is it priced in that there's any sort of chance of, I don't know, the East, the supply from East, like Indonesia, etc., not arriving to the West? No. What would happen if Russia just said, hey, you in the West, you can't get any palladium? That would be a massive, massive shock, obviously. None of these risks to the supply sides are obviously priced in. It's absolutely crazy. It's not even, they're not even reflecting the current value of nickel. I mean, nickel has gone down enough, I would say, that it's like, we might be, this is, somewhere around the levels one would expect the bottom to be in. I mean, it's that has had that big of a fall, and of course the Indonesian suppliers, etc. I mean, they're not even mining cheap nickel. It's not sulfides. It's incredibly dirty, energy intensive, and all that. I mean, it's not like that's how bear markets die, kind. I mean, mines shut down. I remember 2015. There were a bunch of zinc mines that shut down in 2015. All of a sudden, the whole commodity complex bottomed, and we had a massive rally. None of these, I mean, the gold miners are certainly not pricing, the gold units are not pricing in the current price of gold. And by definition, then, they're pricing in no shock to the upside. I would say critical minerals units, same, not pricing in any sort of shock to the upside. So the thing is that it's like when you ask somebody about nickel, they will typically point out the expected surplus coming from Indonesia, or at least their production profile. It's like, yeah, okay, how relevant is that? So what does that mean? I mean, for most people it means that, I don't see a slam dunk macro case to the upside, so it doesn't matter how cheap something gets, because I'm not going to buy it because I always think it's going to get worse. I mean, that's how people operate. The question should obviously be, okay, how much do I pay for this stuff? What's priced in? What's the risks here? If I'm paying for something almost deemed worthless by the market, what are the risks? That it's going to be worthless and be worthless forever. I mean, anything is possible. But what happens if that's false? What happens if that doesn't happen, that it's worth something in the next 5 years or something? Maybe up 1,000%, maybe up 500%. That's a pretty good bet in my book. That's a highly asymmetrical bet. You're not paying for the upside. It's like in poker. Even if you know you have the worst hand, if the odds are good enough, you'll play that hand anyway. Because you got to play it so cheaply that even if it has a 12% chance of winning the hand, it might be the pot odds are so good that it's pricing in a 5%. If you think you have more than 5% chance of success, that's a plus expected value bet. Even though you know that, okay, 88% of the time I'm gonna lose, but the thing is, you make that much when you actually do win, and you paid so little to play. I mean, that's what happening in this sector. I mean, as a poker player, that's how I see it. I mean, again, any loss is 100%. Doesn't matter if you bought here or here. The theoretical limit of the loss is 100%. You go all in. If you go all in here, the maximum risk is minus 100%. Down here, maximum risk is 100%. But the upside, the reward side of that function, is completely different going from here to here. if, let's say, Bear Creek doesn't die, who knows how much that might go from here. If Bear Creek didn't die here, it would still be hard to double that and get a 100% reward, because it probably was overvalued here. It's just orders of magnitude difference because it's an asymmetrical play. That's what I don't know, find amusing. And again, the second thing people bitch about typically is like, yeah, but when is that gonna happen? When is that gonna happen? It should happen at any time. This is already, I mean, this sector is already way too low. It's unsustainably cheap. It's way undervalued, extremely undervalued. It's the most apathetic, dysfunctional pig on an equity market for mining stocks he's seen in over 20 years. Which means that if the market was functioning, bottom would be today, or if it suddenly started to function, and be up a lot tomorrow. Immediate straight shot to fair value. That's not obviously going to happen, because that's not how markets work, or that's not how people work, but that's the truth. So again, and who cares, or I should put it like this, how long should you prepare to wait for a junior bull? If you need 100%, if you're minus 50, that's 100%. That's like, I don't know, not exactly perhaps, but that would mean, and I think it typically happens within 2 years, if I remember correctly. I've drawn these lines before, that anytime you buy at this line, within 2 years you would be up 100% or something. I mean, that's the, past performance. And any buys below that, even more than 100% in 2 years. So from these absurd levels, worst sector in maybe 20 years, how big do you think the next rally is going to be? I think it's going to be enormous. Simply because it's so low now. We don't even need the highest peaks. We don't need to have 2011 sentiment levels. If we just go back to, I don't know, decent sentiment levels, given where we're starting off from today, I'm thinking, hundreds of percent. How long should you be able to wait for those kind of returns? I mean, just look at some of these rats. 1.8 thousand percent, 2,000%, 663%. Well, depending on which one you use, 456%. That's decades worth of returns. And yes, unlike the broader stock market, we tend to be down more in paper losses, so we need more. There's an easy fix for that, obviously. It's like, depositing more money, value shuffling, etc., etc. Be smart, be cool, be collected. Because there's a bunch of juniors out there that keep putting out news. Value is going up. Market is not there. So it's not repricing anything. Just because a news release doesn't get a reaction doesn't mean value didn't change. It's just that there's nobody in the sector that is able to reprice it right now. Someday, I mean, as you can see, how long has this sector stayed at extremes? I mean, let's say it was already extreme here. Yeah, maybe a year or two. And again, if this is the worst, I mean, this action here rhymes with the worst in 20 years. I mean, this is a long, brutal bear. It's even lower than, and again, we have to factor in dilution, but I can see it. I can see that we're around these levels here. I wouldn't be surprised to see, or let's put it like this. My base case is that the market should bottom every day going forward. If it doesn't bottom today, it should bottom tomorrow. If it doesn't tomorrow, it should bottom the next day. If it hasn't in 6 months, I believe it should bottom the next day. So there's in my opinion, we are in a chronic risk to the upside that has just getting or increased. This is one of the most loaded guns you'll see out there. And the comforting thing is that it doesn't really matter if it comes tomorrow or 6 months in a year, or in a year, or even in 2 years, because the rallies are so obscene that, again, if you're down 50-60%, history tells us that's not a problem at all. You have stuff out there with like selling for 5-6 million with like prime real estate. It is absolutely bonkers. In a really hot market, some of those companies could be worth 500 million if they end up making a discovery. So would you rather buy the same company at 100 million or at 5 million? Risk is 100% to the downside. Upside is, orders of magnitude apart. Anyway, let's look at some news. This is really interesting news, I think. I have a pretty good slice of Barsele and Gold Line. And if somebody remember my... let's see here. I did a piece on Barsele where it's like... and you can read this if you want. I compare it to Ikari, for example. I think that's I think Barsele is going to end up being somewhere along the lines of Ikari, and Ikari belongs to Rupert Resources, a nice deposit. I think they have a market cap of 750 million. And yeah, it's wide open. A depth along strike, a bunch of other targets. Didn't I include that slide? Okay, I didn't include the slide. Main point is that, where do I have that slide? 1 second. Gold line. Here. So here you have Agnico Eagle and Barsele, the Barsele deposit. All the brown stuff here and the blue here is Gold Line. Here you have Dragon Mining with their small plant. Here you have the Boliden mines. Here you have a port, good infrastructure, all of that. So you have the largest deposit in Sweden, undeveloped gold deposit. I think it's the second largest in Scandinavia, undeveloped gold deposit. You have a mill here. You have Boliden's mines here. You get a smelter, I think it's somewhere around here. And a port. And you have, I think, maybe these are not the rails, but there's rails going through, I think, here, highways and all of that. It's northern Sweden, where it's very cheap to mine, typically. So my blue sky was that, okay, I think the Barsele deposit is obviously an impressive deposit. Probably, I would think, worth hundreds of millions in NPV right now. One day might be worth over $1 billion. I wouldn't be shocked to see that, especially given the mining costs in northern Sweden. Coupled with, we have some of the best and most efficient mines here, extremely cheap power, good infrastructure, all of that. Completely different to outbacks of Canada. And then you have this Gold Line belt, which is the main gold belt of Sweden, which is very underexplored actually. And Gold Line kind of controls, you can see the outline of the metallogenic belts. So it's like the greenstone belt here. That's around, I guess, 100 kilometers or something. So my blue sky was like, it would be great. Or I should say, consolidation looked so obvious. You have a big proven deposit here. You have a small plant here. And you have a junior that kind of owns the lion's share of the rest of the belt. Together, these would have a 100-kilometer strike of the Gold Line belt in Sweden, plus the largest undeveloped gold deposit in Sweden. So if they don't find almost anything more than this deposit, that's already a mine. That's already mine worthy. if they grow this, which looks very likely, it will for sure be mine worthy. Then you have 100 kilometers of exploration. You control an entire gold belt in one company, and you have the largest undeveloped gold project in Sweden, second in Scandinavia. And they recently announced, Barsele and Goldline announces merger to create Scandinavian focused district scale gold exploration and development company. Taj Singh, who got Discovery Silver to go from, I don't know, 40 or 30 million dollars market cap, if I remember correctly. It used to be Levon Resources. I actually owned Levon. I bought Levon during the 2015 bear market. Unfortunately, I didn't hold it long enough. I think I would have gotten a... Well, we can actually check that. I think it's DSV. I don't know if it goes back that long actually, but let's see. What was it? Yeah, I think I actually bought it around, like, I don't know. I'm not gonna say 5 cents, or maybe let's say, oh, I don't know, K35 maybe. It peaked at what? $2.74. Yeah, so it was a multi-bagger. Huge undeveloped low-grade silver resource. And this company was for a while, 2 years ago, worth or valued at 750 million. So when you see Taj Singh go from that to get into a 5 million market cap company, you gotta believe he sees something. Well, I guess this probably was the plan from the start, because this happened quite quickly after he got involved. So all of a sudden you go from 2 separate juniors, one with a 85 kilometers of strike, underexplored strike of the Swedish gold line, one company with the largest undeveloped gold deposit in Sweden, and all of a sudden, if this goes through, which I hope, they will be the king of Sweden in terms of junior gold exploration, and control probably the second largest undeveloped gold project in all of Scandinavia, at a perfect location with 100 kilometers of strike of exploration potential. So who knows how many satellite deposits, or who knows if even Barsele is going to be the biggest one. I mean, that's the kind of thing I like. And imagine if you're a, I don't know what's going to happen with NICU, but it's like, okay, if they drill more at Barsele, they prove that's like, I don't know, 3 to 5 million ounce deposit at least, good grades like Ikari type, and they find or show that, hey, the rest of the 100 kilometers, because Goldline has already hit some stuff, they show that, okay, there's satellite deposits here, and they don't need to be big. I mean, if you build a plant, 300,000 would for sure be a satellite deposit, 200,000, maybe 100,000 ounces. Maybe there's more Barsele type discoveries. So obviously in my mind, I'm seeing that, okay, this is Barsele for starters, probably going to be 3 to 5 million ounces at least, I think, maybe up to 10 million ounces plus. So that could be a mine that could be up and running for decades, and you have an entire district to explore. So who knows? Imagine owning that, which I do. That's what gets me really salivating. The only big undeveloped gold asset in Sweden, and I can buy the whole shebang, assuming this deal goes through. The valuation, I think, will be around 34 million Canadian. That's obviously peanuts. An entire gold belt, largest undeveloped gold asset, you can get there for 35 million Canadian. In the bull market of 2016, you had companies go to $35 million on soil samples. It's absolutely surreal how much value you can steal right now. Years of de-risking, years of success, tens of millions of sunk costs, and you can buy it basically for less than sunk costs. It's absolutely atrocious how cheap stuff is. If this was a hot market, there's no way I can, buy any sort of meaningful stake in some of these gold juniors. Now you can buy entire districts and actually, own a, 0.1% of the company, or even up to 0.5% or something. That is extremely enticing to me. to imagine, okay, I personally like, own 0.5% of this entire thing, which is kind of unique, but because it's the only gold line in Sweden and stuff like that. So I'm biased in more ways than one, because I find it even more exciting that it is in Sweden, and it's so rare. Yeah. Anyway, as always, consider me biased. I own shares of both companies, and Barsele is currently a banner sponsor, and I'm gonna own a big chunk, or pretty big chunk, in the merged company. So fingers crossed that goes through. Cabral Gold drills 28 meters of 1.2 gold in near surface oxidized material central gold deposit, Kuyu. Here you can see some of the stuff. I mean, typically the grades might not sound that much, but this is like, everybody I've talked to, this would be, and that's obviously why Osisko Gold royalties got in. Well, not only the oxide blankets perhaps, but it's like they see, gold, what are they called? The Pierre Lassonde Landin backed company right next door. I forget what the name is, but it's like they probably see the Cabral's land package as the natural next step, and I think that's what Osisko Gold royalties also sees. And this stuff should be cheap as chips to mine, and the margins should be great, and the capex should be ridiculously low. I mean, this is like loose gold bearing dirt. I don't think you need blasting or anything. You just need to shovel this into some cheap recovery plant. Even if you have a few hundred thousands of this, I think, that could make a lot of money, especially in this day and age. High rates, high inflation. If you have very low capex and good margins, some companies would die for that. Yeah, and obviously they also, where they get these gold-bearing gravels at top, that's typically where they have the sourced, or the sources at depth, the actual structures. So they have a huge land package, a bunch of targets. I like Brazil from a mining jurisdiction because there's Equinox, I don't know how many mines they have up in Brazil. You have Aura Minerals, which recently got into Altamira. They also have, I think they have multiple mines. Maybe I'm putting some in production right now, I think. We're developing them. So good jurisdiction for mining, as it appears to be. You have third-party validation by Osisko Gold royalties, which is good it limits the dilution risk as well. Because the thing is, like, the market is totally bonkers. It's bullshit. It's spewing bullshit. The valuations out there, you can't take them seriously. That's the market making huge mistakes. Because on that note, it's like when people say, "Oh, the market is always right," how do you explain this short? It was just almost 2,000% wrong here apparently. Then it was like 95% wrong here apparently, and then 2,000% wrong again, and then minus 90. You know what I mean? So are we to believe that there's black swan events in Bear Creek or the gold sector every like 2 to 8 years? Like, that's bullshit. No, this is just how this sector works. It's absolute bullshit. You have to laugh at this sector. This is incredible. This sector is not hard at all if you have the emotional fortitude. There's no, if there's any ambiguity of what to do at times like this, I don't think you're gonna make, you should probably stick to index funds, and that's okay. That's what most people should do. But if you think about it rational, we know it's a cyclical sector. We know there's 100% chance of being this turning into a bull market someday. Is there any sort of confusion as to what to do? I bought the shit out of this bottom, and since then I've been all in. Now, if you entered here like most people do, that's what people tend to do. 80% of the people enter any sector when it's hot, then they sell out when everybody sees it's a bear market. I mean, after the fact. They didn't buy here, ride it up here, and sell here because they thought it was a bull market. No, they thought it was a bull market and had high hopes. Now they're convinced it's a bear market, and now most people are selling, or have been selling. And that's obviously when you should be buying, because it's when it's obvious it's a bull market, that's when you should be selling. Anyway, so that's Cabral. Brixton Metals, 248 meters or 0.6 CU equivalent within 717 meters or 0.5% CU equivalent. I mean, this is a huge target. I have no idea how this is going to look. I mean, they can step out in, I was going to say, every direction, basically. This doesn't really give it justice, but it's like, it's deep though. But the interesting part is that, yes, BHP participated in the latest placement. And then we just have to, again, okay, so they're saying, hey, it's early days, we like what we see still. Again, 67 million. BHP has a market cap of, I think, $120 billion. Either the market is brain dead or BHP is brain dead. And they raised, or are raising, 14.5 million. They do one step out hold, that's a bullseye. I mean, this I think has 10, 20, 30 bagger potential. And then it's like, oh, can you guarantee that? Obviously not. Because if that happens, it would pay for, 20, 30 other stories that went to zero. So you can just, back calculate, okay, what's the chance of success I would need to see? If there's a 10% chance they end up delineating a VHP size price, I mean, then it's probably really cheap. And if you have 10 of these stores and one makes it might pay for all the other ones. But that's what you have to keep in mind. The odds might be, who knows? Nobody knows, of course, but it's like, let's say it's like, okay, what does BHP need to see the chance of success to be for a BHP size price? I don't know, maybe 10%? Maybe. So it's pricing in 64 divided by 1 billion, 6.7, well, that's pre-dilution. Let's say 7% of being worth 1 billion one day. That's excluding any future dilution, but 1 billion wouldn't be a BHP size price either. Maybe 3 billion? That's in that case, it's pricing in what, a 2% chance? And then you have to ask, okay, would BHP be interested in this junior if they thought it was a 2% chance of success? I mean, 1 out of 50 of these targets turn into something real. That sounds way too low. But we should not be surprised, because it is the most brain-dead sector we've seen in 20 years. Makes perfect sense. Again, we can bitch about it, we can complain about this sector being shit, but there's no other place. We need a super depressed, batshit crazy, hyper depressed, ridiculous monkey market for the big gains. For the absolute big gains, we need it as depressed as possible. We need it as dumb as possible. So what we're complaining about, in a sense, is that, hey, okay, any buys around here, any dry powder deployed might have the highest future expected returns in 20 years. Best opportunity in that case in 20 years in this space. You could wait 20 more years to have such high or such asymmetrical risk reward. Is that something to complain about or not? I mean, if you're down 50% and the only thing you're saying last 3 years, or 60% or whatever, 70 last 3 years is a downward market, obviously that feels like an eternity. It's like, why should I be buying down here? Last 3 years I've only seen this market go down. But that's the thing. That's when people. That's why this is so low. If every investor in this sector would know what they were doing, let's say, we wouldn't be here. we get this because everybody's dog shit at investing in volatile markets, and they forget that everything is a cyclical sector is cyclical. Do you think people? Do you think the price would be up here if people had a firm grasp of this being a cyclical sector and that they're overpaying? Absolutely not. So again, or as always, volatility is a double-edged sword. If you believe the bullshit that the bullshit prices Mr. Market gives you at all times, you have no chance. If you call bullshit either that they're too high or too low, I don't see how you lose in this sector over time. Minus 50% is not even a problem. Minus 50%. I used to average minus 50% every 2 years. When the next bull leg came around, minimum 300% up. It's not the bears or the paper losses that kills people over the long term. It's obviously what they do in them. You can have someone be down 99% in this stock over the last 15 years, and someone else could be up hundreds or 1,000%. It simply depends on when they're buying and when they're selling. If you're buying up here when everybody knows it's a bull, you'll lose money. If you buy when everybody knows it's a bear market we're in, you'll make money. Let's see here. Line 1 drills almost 2,000 grams per ton gold and 866 grams per ton gold at Tuvalu. Grants options. Bonanza stuff. And of course I think, and it's not my original idea, but the idea is that actually some of these drill results are still underappreciating the true grade because they miss a lot of small gold veins that might be right next to the hole. But if they're branching out into the surrounding rock, I mean, if you put a drill hole through it, you're not gonna capture the whole tree, if you know what I mean. You'll hit a few branches and the trunk perhaps. But I mean, does it really matter if it's like, I mean, the main vein is like 2,000 grams per ton? No, not really. So it's gonna be very, very interesting. I mean, line 1 I think is a loaded gun, kinda, because now everybody's waiting to see, you know, if they can make this profitable. Because obviously, forever, I mean, every startup is probably far away from being the most efficient. I mean, when you start it up, obviously. But as soon as if they can show they get positive cash flow, and it's like, okay, we're talking maybe, given how much exploration potential, I mean, this could be if it makes money in this environment, given that we know there's like the 500 zone with like thick bonanza stuff, I mean, that should be printing money. So I think line 1, that could get some shock revaluation, assuming things go well, and assuming it's like we don't know if there's another. I mean, let's say they do a placement. Let's say they need more money to, I don't know, fix things or like get everything smoothly running. Yeah, it might be another haircut, but it's like, I don't think that's gonna matter in then, because otherwise, I mean, that's the good and bad thing. Either this will work or it won't. If it doesn't work, it doesn't really matter, because again, it's like the downside is always capped 100%. If this does work and they show they have a profitable gold mine that could be going for a few decades, this price is gonna look really, really cheap. And then we have Pacific Ridge, induced polarization survey results from Chuchi and Chuchi South copper gold projects confirm the potential for several large porphyry systems. Pacific Ridge plans to launch inaugural diamond drill program 2024. Hey, the more the merrier, right? I haven't gone into depth on this. I hope Quinton will talk about it tomorrow. But they're finding some good targets, and of course, like always, okay, what's priced in? 20 million. 20 million. I mean, there's not pricing anywhere near a copper gold porphyry mine from either LIO or the earning with Antofagasta or Chuchi and the other projects as well. So a highly asymmetrical bet. Market is bullshit right now. Fast forward 3 years. And by that time, I think the market, at least within 3 years, the market should be have seen a sentiment high. Maybe euphoric high, who knows? Still, fast forward 3 years. If we just could teleport, let's say we buy a few shares now. Fast forward 3 years, we go away on a long holiday, juniors like this. We know what we paid for it: 20 million, 130 million shares outstanding. We know it can go. I mean, theoretically, it could go to zero, either via dilution or go bankrupt. But there's also the possibility that we go into a hot copper gold market. LIO or any of the other projects end up being recognized as real deposits, whatever. What could the upside be? I don't know. What if they find something like, what is it? Not Imperial Metals, not Cadia, Red Chris, for example. Who knows? 500 million? I don't know. Again, it's hard to think about this because right now we know there has to be something absolutely epic for Junior to be up at 500 million. That's how it feels now, and that's what people, if you've only been in this sector for the last 3 years, you can be forgiven to believe that this is the way this sector works. But we've only seen half of the picture. If you bought in if you bought in around here, this is what you've seen. I bought in here and this is what I saw. But I stayed long enough to see the other side of this sector. And just to one of the best examples still, I think, for this is that in 2017, Garibaldi Resources was drilling for nickel in BC. Before they had I think it was before a single assay result was out, they reached a market cap of 550 million. 550 million without a single assay. Only hope and greed. I shouldn't say only, but you get the idea. Only theoretical value got it to 550 million. This is the same sector as that, just at polar opposite in terms of sentiment in the cycle. That was a sentiment high, or a sentiment low. But we obviously, in order to get greedy, we have to think from the future and go backwards. How do you make money in this sector, the most amount of money? Well, you buy very low and you hold till it's gone up a lot. That's how you make a lot of money. We know we're extremely low now. So we have to kind of, play the three-dimensional chess. We have to close our eyes, imagine within, let's say, 3 years, pick a range. Okay, so what if copper and gold is by that it's, gold is, let's say, way past $2,000, copper, I don't know, maybe $5-6, something like that. The sentiment is hot again, there's a shortage. I mean, we can come up with a lot of scenarios, and I mean, because I thought this sentiment back here was great. That was the first sentiment top I ever saw. Talking to people who saw this top, this wasn't even remotely close to how euphoric this was. So there's a wide range even in the, high sentiment cases. And this is obviously more depressed than back here. So there's degrees in hell and degrees in euphoria. But let's just fast forward. It's like, okay, how much would could I make at the next sentiment high? Because that we know is going to happen. 100% chance there's going to be a bull. Okay, so what do I do now in order to make the most amount of money for the next bull? Obviously, buy as cheap as possible. Buy the most distressed, hated assets out there, preferably, very preferably, real stories, real assets, etc., etc. It's like, I have no idea where, for example, Pacific Ridge is going to be within 3 years. What's going to happen between here and then? I just now know what it's valued at right now. I know, well, I have a huge spectrum of outcomes, like what it could be worth. If they, show, let's say, even better success or better discovery, then you slap on the sentiment premium. I mean, if they had the same news releases and sentiment would be up here, Pacific Ridge would probably be trading at least, I don't know, 70, 80 million or more already, I think. Same news. It's just totally different sentiment environment. But that's what we have to figure out. Because now, banked success is trading really, really cheap. But the ones that will go up the absolute most from bottom to peak are the ones that are kind of pure potential right now. They find something and they're still wide open blue sky. Because up here, as we saw in 2017 with Garibaldi, people paid a lot for blue sky potential. Only potential. Right now you get nothing for potential. Bank success is selling for cheap. And at the same time, I do prefer the bank success stories. I mean, you can't really beat. Let's say you have 20 stories, all have, pretty good resources. They have something tangible in good jurisdictions. From here to the next sentiment high, I mean, they're probably going to go up on average at least 300%. Some may be a lot more, some may be even a bit less. But there's also going to be the ones that's like, it's a very long shot. But there will from here, there are some companies out there, I believe, that in the future, from where we are now to then, will have become 100 baggers. That's how cheap and low this sector is right now. Of course, that's the hard part. So if somebody asks me, would you go all in on the shot of having a 100 bagger? Or would you rather stay with your, you put your portfolio where it's like, you think there's an 80 to 90% chance you're going to end up with a, 300%. From compounding perspective, it's obviously best to go with the much lower risk, higher probability of good returns than very low probability of super extreme returns. But I do like to dabble in some of the early stage exploration companies. And on that note, there's an Argentinian private company which I'm quite fond of. Recently got a story on my radar. They have the land package immediately south of Philo's discovery, and they have 7 targets. I actually forgot the name of it right now. We'll talk a bit about it in another video, I think. So I'm going to be participating in their private placement. And that's the thing. It's like, I'm not betting the farm on that. But I have a bunch of stories like, I don't know what chance of success is for blue sky. I mean, 10% would be probably pretty good. But I know that in some of these cases, if that 10%, or maybe it's actually 20%. I mean, some cases I think it's more than that. Even though we might not be talking like 50 baggers, but it's like, 30% chance of getting a 10 bagger, that's a great deal. With the, and they're open-ended, that they might become 30 baggers, 40 baggers, 50 baggers, that's great. And those are the kind of cases you can find because it's so cheap right now. Up here, I did not know many juniors where I saw it's like, they could probably go up 10, 20, 50 times. No. Up here it's very hard to find future 10, 20, 50 baggers. Down here, they're all over the place. Literally all over the place. But this is where people sell. because they don't think from they think investing is about what has happened. Past is irrelevant. It's where we are right now, where we're gonna go one day. And I wouldn't be too surprised if some companies that people bought here, they'll be in the green on those one day, even though they might be down 60% right now. And same, I mean, hot damn, some of these stories, like, you know, you buy here and you're down 88%. I mean, you might end up making money in some of those stories. We have no idea. I just know it's dirt cheap right now. Yeah, so Hercules is doing quite well. That's an interesting one, obviously. I've taken some profits, because the thing is, I was gonna say, I'm more likely to take a bit more profits here. Here, I think I stopped taking profits because, I might have sold a bit, but it's like, with no news, by definition, if price goes up on no news, it's a bit less of a buy, if I buy at all. If it goes down, it's more of a buy than before. It's just simple value shuffling. But if there was some news, I don't have any rules, like something comes out, it's like, oh Jesus Christ, it's, you know, value went up like 200% and it's up 100%, then that's a big buy all of a sudden. There's some context. I believe there's been talk of some core, for example, that's going to be shown at some conference or something, and typically you don't bring core if it doesn't look good. And I think it's from a whole other than the one that's been reported. But is this a no-brainer 10-bagger from here? No. Is it possible? Yeah. So should you rather have Hercules than... I mean, the thing with stores like this, I mean, given they have drilled a bunch of holes, they drill deep holes, they hope probably hit something, because I'm pretty sure Barrick looked at the core. If they hit, I mean, we only have one hole, so you know, a few amounts of more holes will change the picture a lot, especially, you know, both if they're good or bad, even though that's not going to be the end of it. I mean, they can have, let's say they put out 4 or 5 great holes. That doesn't mean it's for sure going to be a, you know, billions of dollars worth deposit, and the same goes if they don't hit on every hole or a lot of good holes. That doesn't mean it's going to be a failure, because it's still so early on. But the point is that if they slam some good holes, you know, big step out holes, I mean, stories like this, especially high profile, where you have Barrick and you have a large following, etc., the hype can get really good really quick. This is one of few that's actually outperformed recently. And I mean, just taking some profits in Hercules, for example, and be able to put that into some of the other ones that has not moved yet, where you expect, I mean, let's say you make 50 or 100% on this after no real news. Let's say 100%. Okay, you go up 100%. Then you put that into, let's say, stories you think, hey, I think these at least are going to go up 300%, so let's 4x. So you take whatever capital, you double it in a store like this, which could go up, you know, could double and double again from here, but still. But you take some off the table. That doubled, so 100%, so X becomes 2X, and then you put it into low risk stories where you think there's a matter of when, not if, they're going to go up 4X, 300%. All of a sudden, you turned 100% run plus a 300% run to an 800% compounding from 2 stocks. So, I mean, you don't need, if you have a few of these, and let's say you're down, you know, you have some stocks you're down 70% in. You have a decent position in one of these. I mean, that might be the difference from being down 70% to 60%. And it might not sound like a lot, but that's like I mean, take here for example, here's 60%. Let's say we go into a next sentiment high. Okay, so you're down 60%. That's 762. You're down 70%. I mean, it's still down. No, I should. Oh, I did it the opposite way. Okay. Let's say we. Jesus. Okay, I should do. Sorry, I should do it like this instead. So let's say you have a few of those winners, and you're only down 60%. That would be 159. You would make money on that. You would. What would that be? Well, I mean, you would be in the green at least. Even if you're down 60% and it's only 159% rally. If you're down 70%, well, now I'm doing the opposite. I'm actually being an idiot right now. What the hell am I? Oh well, one could say it like this. I guess that shows like how much would you need to get back to even. 245% instead of like 159. I mean, that's a pretty big difference, even though it doesn't sound much. Like, oh, I'm minus 60%, or I would be down 70%, but I had a few winners here and there. Now I'm only down 60%, and people like, oh well, that's that's not a big difference. Actually, it is quite a big difference, and that's why I keep saying like 50% in this sector. That's like peanuts. But we still want to, obviously, I mean, I don't want, well, I prefer for people not to simply just, walk away. It's like, I don't care because when it rallies, it's going to go up so much, so I don't, can't cope thinking about it, and I don't pay any attention to due diligence or value or anything like that, and just banking, because that's what I think I see people do. Like, they know, which is true, that like when silver gets going and the junior silver gets going, I mean, it can go up 1,000%, 2,000%, some of these silver juniors, but still that's not like a free pass to like, oh, buy whatever shit company you can, because they might, I mean, if it's been diluted by 30% or 70%, that's a pretty fat difference at the end, even if they do end up rallying 1,000%. That's a huge difference, hundreds of percent in difference. So it's not like it's I mean, I take this seriously. It's like I do I meme a lot nowadays, but it's like I'm pretty sure, I kind of have my favorites in mind already, and I'm just waiting for news. And in the meantime, I watch the volatility. I mean, if stuff goes up 20-30% on no news, something goes down 20-30% on no news, I might reshuffle. So in that way, it's like, I mean, you can literally, since no stock moves exactly the same, and there's news out, and I've talked about this a bunch of times, but you have a bunch of stocks, you think they're worth this. Some stocks put out news, they don't change price, but they go up here in value. Obviously, they become better buys. Some stocks just fluctuate on no news, they go up and down. I mean, the risk reward changes on a daily basis in this sector. I think that's it. Jesus, what a rant. Okay. Yeah, I might have talked too much about stuff I talked in the last video, but I've been getting some, pokes from people who wants to hear more rants. I guess I would end with the fact that a bull follows a bear 100% of the time. There's no question, and there's no question we're deep in a bear. I mean, it's not like, oh, I'm not sure if the best is behind or ahead. Can it still go lower? Yeah, that's not the point. The next big move is going to be bigger the lower this goes, and I'm not talking, this is a proxy obviously. The lower this goes, the lower this sector goes, the more you're going to make when the bull starts. And there's no way to, I mean, when you know the bull is in full effect, it's already too late to buy for the big gains. So we have to, I mean, by definition, think about that. It's like, if we're even remotely close and just keep buying the lower something goes, I mean, you'll make money every single cycle. there's 100% chance the junior sector is going to be in a bull market, and perhaps even a raging bull market one of these days, or one of these years or months. And if you wait for it to be everybody to see it as a bull, the bull is already so long in the tooth that it's going to soon die of old age. But the thing is, obviously, as always happens, the longer and stronger a bull goes, people think it's going to continue forever. It's like really like saying that since I was gonna say, like, you have an old man, 99 years old. You expect him to die every day going forward. It's like, oh, and he's still been around for like 300 days more. And your conclusion is that, well, that must mean that he's gonna live to 120 or something. No, it's just one day closer to the inevitable death. We don't know when, but we know that 100-year-old man typically doesn't live for 20 more years and stuff like that. Whereas a kid 6-year-old, I mean, he might live for 94 more years. But people believe that the older a bull gets, that it somehow becomes immortal all of a sudden, even though it's like choking on its own, I don't know what. But it's like it's getting old and saggy, and yeah, just old and saggy. It's like the older this gets, the closer it is to dying. But people think it's the opposite, that, oh, now I for sure won't buy because there's no end to this bull. Well, it's really old. Would you bet on 100-year living for 20 more years, or a 6-year-old living for 20 more years? I mean, it makes absolutely no sense, because we know things always change. And by definition, one day more in a bull is one day this is the inflection point, and we didn't know that until hindsight. But obviously, this is a weekly chart, every additional bar while this bull was still alive got it closer to its death. And every single weekly candle in this bear was 1 week closer to the next bull. And the big money is made when we don't even see a bull. There's nobody that would say this is a bull market. But in order to capture the full bull, or even 50% of the bull, we need to be aggressive when it's obvious that, when we don't think it's a bull yet. Because when the bull is obvious, the gains are already gone. Then you'll be stuck with whatever is left, like, I don't know, not 2,000%, but maybe, I don't know, 300%, depending on how certain you need to be of, being in a bull. It's like you kid yourself if you think that everybody, when it had rallied this much, and you think that everybody was convinced it was a bull already. No way. This was a 200% pop in Bear Creek. False bull start. If everybody was convinced it's a bull, it wouldn't have stopped here. So let go of the only thing we know. There are two things we know. Sentiment always changes forever. Every single bear is followed by a bull. And the price we pay. And I mean, some additional context is that we know the bulls produce returns in the juniors that are still around from the lows of like 3,000 to 2,000%. And we also know that if we wait for a bull to invest, we probably missed 2/3 of the returns already, and are only 1/3 left on the bull until we get the next bear. So if the only change you did in a cyclical sector was to only buy when everybody knows and can see it's a bear, and you sell when everybody knows and can see it's a bull, don't see how you lose money over time in that. You probably make a lot of money. But obviously what happens is that people get into sectors when everybody agrees it's a good sector, it's in a bull trend, And I mean, that's the funny part. People think that the big gains are made in the bull. No, the big gains are made from investing in the bear and then riding a big chunk of the bull. But you kid yourself if you think you're going to be able to spot exactly what is the start of a bull or start of a false bull. That's, I would say, impossible to know. How many people do you think were bullish here? Does this look like a beginning of a bull trend? No, not even close. Not even close. So I mean, if anything, now that I think about it, I mean, I would say this, I mean, well, not exactly perhaps, but it's like, okay, well, here we even had a false rally as well. But it's like, okay, false rally, down to the abyss. False rally, down to the abyss. Nobody on God's green earth could call this a bull market, so it's probably a high time to invest. Thanks for listening. Consider me biased when since I talk, with every company I talked about. I'm gonna be biased if I own it. I'm gonna be twice biased if it's a sponsor company as well. And I mean, do your own due diligence, because I mean, the thing is, and I made this point on Twitter, it's like, whenever you buy a company when it's down on a given day, that immediately tells you have conviction. You know what you're doing. If you don't, you're either already too deep in the company, you have too much exposure, or you don't know the company enough. You don't know it. You don't know really why you're buying it. You can't see the value. And it's going to go back and forth, obviously. But what I like to do, actually I should do more of that, is just keep refreshing, go through the company presentations. Because the shit we see on Twitter and the metals that are swinging, now it's 90% negative stuff. That's obviously not going to get you to, think it's a good time to buy. But when you go through the presentations and remind yourself, like, right, this is what they have and this is what they're planning to do and all of that. And then you think from the end, like, okay, if the 10x news releases are somewhere along the lines of whatever, and I know this is going to turn into a bull, then hey, maybe within 3 years this is going to be up 400%. So then you buy. And if it goes down even more, nothing has changed really, you're thinking, well, now it's my first buy might actually net me 300%, but now I think any dry powder put here is going to net me 400%. So again, think from the end. I've done some spreadsheets myself where I list what amount of ounces I think a company's going to have and to what certainty or probability, and then I slap on a sentiment high value per ounce, meaning that's like, okay, I think within, let's say, I think they're going to hit 3 million ounces. And one of those days, those 3 million ounces are going to fetch a price of $100 to $150 per ounce. And then I, put in what the market cap is now. And all of a sudden I can see, well, okay, my base case has this going up 350%. If you stare at spreadsheets like that, where you have actually put in a fixed value, and you think from the end, or think about the future and go backwards to the current price, that's going to get you a hell of a bullish the cheaper this sector gets, because you're going to be watching the future returns go up when price goes down, instead of just watching price go down and get bummed about it. Yeah, thanks for listening. Bye, dudes.